limited.com.
About to go in business all damn day. Our first category is Category 1, Single Ownership Accounts. The rule for coverage for single ownership accounts is simple. The only requirement is that the deposit must be owned by a natural person and that no beneficiaries are named. Now, in addition to deposits that are owned by an individual person, there are some other common situations where deposited funds are specifically included and insured under Category 1, Single Ownership Accounts. For example, a deposit account, which is sometimes also called a DBA account or doing business as account, is insured under Category 1, Single Ownership Accounts. While a sole proprietorship deposit is open based on a business activity conducted by the depositor, it is important to understand that a sole proprietorship is not Category 7 business organization accounts. The reason is, with a sole proprietorship entity, the owner has not formally created either a corporation or partnership entity, which is required to be covered separately under Category 7 business organization accounts. That's the one I need to see. In rare cases, a sole proprietorship or a DBA may be co-owned, for instance, by a husband and wife. If the owners have equal withdrawal rights from the account, then the account will likely be insured under Category 2 joint accounts, which we will discuss shortly. A common question the FDIC receives is, how does the FDIC insure an account set up for someone who has died? These accounts are often called either an estate account or a decedent's account. In this situation, the funds are considered legally still owned by the decedent, and a decedent's account is therefore insured under Category 1, Single Ownership Accounts. Please note that the executor or fiduciary who may open this deposit account in the name of the decedent's estate is separately insured for any funds that the executor places in his or her personal accounts at the same bank. Deposits held under Category 1 single accounts are insured for up to $250,000. Therefore, all Category 1 single accounts held by the same depositor at the same bank are insured for up to a maximum of $250,000. One thing we're going to discuss throughout this presentation, and this is based on literally tens of thousands of questions the FDIC receives, are some common misunderstandings or misconceptions that we find both depositors and bank employees have in calculating deposit insurance coverage. Well, here's one of the biggest misconceptions. If you have a single deposit owner who designated the account as a payable in death and names beneficiaries on that account, the deposit will first be analyzed using the rules provided for under Category 3 Revocable Trust Accounts. Another important fact to remember is that Category 1 Single Ownership Accounts is the default category for individual depositors. This means, as you will see in the coming slides, if a depositor cannot meet the requirements of the other individual ownership categories, that is Category 2 through Category 6, the depositor can still be insured for up to $250,000 under Category 1 Single Ownership Accounts. So at a minimum, any natural person who is the owner of deposit funds in an FDIC-insured bank is entitled to at least up to $250,000 in FDIC deposit insurance coverage. This rule applies to each and every FDIC-insured institution, regardless of the size or the location of the institution. Here is a simple example of Category 1 coverage. Jane Smith has 4 Category 1 single ownership accounts. Why are these accounts considered Category 1 single ownership deposits? Because Jane Smith is the sole owner of the funds, and she has not named any payable in death beneficiaries. A review of her account shows a savings deposit for $125,000, a CD for $100,000, a second CD account for $50,000, and a money market deposit account for $50,000. Her four accounts have a total balance of $325,000 under Category 1 single ownership accounts. Well, since only $250,000 can be insured, the difference, that is $75,000, is uninsured. Based on phone calls the FDIC receives, again, a common misconception that some depositors have is that by using different product types, such as CDs and savings accounts, the depositor can obtain separate deposit insurance coverage. This is incorrect. Remember, the type of deposit product does not make any difference in calculating deposit insurance coverage. We have now completed our discussion of Category 1 single ownership accounts. Let's move to our second ownership category of deposit insurance coverage available to individuals, which is joint ownership coverage. The requirements for joint ownership coverage are: first, each co-owner must be a natural person. The FDIC occasionally receives questions about setting up joint accounts with, say, a corporation or a trust. This arrangement would not qualify for joint account coverage. Second, each co-owner must sign a signature card, but there are exceptions. The common exception to this rule is when opening a certificate of deposit or when accounts are opened by a broker or agent. All co-owners are not required to sign a signature card. Electronic signatures are acceptable. Third, each co-owner must have the same or equal withdrawal rights to the deposit funds. This is extremely important. To establish a valid joint account, each individual on a joint account is considered an owner of the funds and must have the right to withdraw an equal share of the deposit funds. If it is determined that one person on a joint account is actually retaining control of the withdrawal of the deposit funds, then the FDIC will consider this person to be the true owner of the deposit funds and calculate the entire deposit as the true owner's Category 1 single ownership deposit. And the last issue to consider is that the FDIC will assume the ownership among all owners of a joint account is equal unless otherwise stated in the bank records. If the requirements for joint ownership account coverage are met, then the FDIC deposit insurance coverage is up to $250,000 for each owner of Category 2 joint account deposits. If a depositor establishes multiple joint accounts in a bank, the owner's specific ownership interest in all joint accounts are added together, and this combined ownership interest is insured for up to a maximum of $250,000. Here are two situations in which a deposit may not be insured as Category 2 joint accounts. First, remember that adding the name of a person on a joint account for convenience purposes may limit equal withdrawal rights and result in the account being insured as Category 1 single accounts. Second, if you have two or more owners of funds and they designate the accounts as payable in death and name beneficiaries, please remember the accounts will first be analyzed using the rules provided for under Category 3 revocable trust accounts. Next, we will discuss some common misconceptions about Category 2 joint accounts. Please note that the deposit insurance coverage for this category of ownership is not, and I repeat not, increased by doing the following. First, rearranging the names listed on the deposit account does not increase coverage. As an example, let's say we have two owners of a joint account, John and Mary. An account titled John and Mary is not insured any different than the account opened Mary and John. So switching the order of these two names in the title of the account is irrelevant. Second, Another misconception that the FDIC is asked about is whether using different Social Security numbers on different accounts somehow increases coverage. It does not. Again, if John and Mary are co-owners of two joint accounts, and John's Social Security number is used on one of the joint accounts, and Mary's Social Security number is used on the other joint account, this does not double the amount of deposit insurance coverage. And the third misconception is that substituting conjunctions on different joint accounts will increase coverage. So, for example, if one account is titled John and Mary, and the second account is titled John or Mary, both of these accounts are added together in calculating deposit insurance coverage. Using different conjunctions on different accounts does not increase coverage. Here you see two joint ownership accounts opened at the same bank. Are both of these deposits fully insured? Well, our first account is owned by Jane Smith and Andrew Smith with an account balance of $400,000. Our second account has Jane Smith as the owner, with Harry Jones as the co-owner with her. The second account has a balance of $200,000. So, are all of the owners fully insured? In calculating the amount of deposit insurance coverage, we have to look at each owner's interest in all joint account deposits. Remember, there is a presumption that each person has an equal ownership share of the funds. So when looking at our example, we have account number 1, Jane Smith and Andrew Smith, as the co-owners of the account, with a total balance of $400,000. The individual ownership interest for each owner under account number 1 is 1/2 of $400,000, or $200,000 for Jane and $200,000 for Andrew. For account number 2, we see that the ownership interests are $100,000 for Jane and $100,000 for Harry. In looking at the column for Jane Smith in this example, you see that Jane Smith has a $200,000 ownership interest in the joint account category for account number 1 and a $100,000 ownership interest for account number 2. When we add Jane Smith's ownership interest together for both of these joint accounts, she has a total of $300,000 in the joint account category. Now, the most that any one person can have insured in all of their joint ownership deposits together is $250,000 per bank. And therefore, since Jane Smith has $300,000, she is uninsured for $50,000. This example shows that in calculating joint account coverage, a depositor's ownership interest in all joint account deposits must be added together in determining how much insurance coverage they can have under Category 2 joint accounts. The key point to remember from this example is that while Jane Smith did not have an ownership interest of more than $250,000 in any one joint account, her combined ownership interest in multiple joint accounts totaled $300,000, and that resulted in her having $50,000 of uninsured funds. On this slide, we will look at an example of the impact of the death of an account owner and the application of what we described on slide 12 as the 6-month rule. Let's assume John and Jane Smith had opened a joint account for $500,000 on January 1st, 2013. John dies on March 31st, 2013. What is the deposit insurance coverage for the account now that John has died? The answer is that for the 6 months following John's death, assuming that the account remains open and Jane does not retitle the account will continue to be insured for $500,000 as though John was still living. After the 6-month grace period, assuming the account has not been restructured, beginning October 1st, 2013, Jane would have $500,000 in Category 1 single accounts with $250,000 insured and $250,000 that would now be uninsured. One of the most popular categories of deposit insurance coverage that is available to individuals is Category 3 revocable trust accounts. Before I discuss the rules for revocable trust deposits, let's start with defining these types of accounts.
It came from a webinar from the FDIC on YouTube. I did not own the rights to the background, but I do own rights to the background. Peace.